Good morning, everyone. On behalf of Indian Business and Professional Council, a warm welcome to all of you for today's session on economic substance, new regulations and rules. This session is organized under the AAA focus group. After a short presentation, we will have a panel discussion, which will be followed by a brief presentation on the upcoming AGMs and elections on 7th of March. So to begin with today's session, may I please welcome the head of AAA focus group, Mr. Naveen Sharma. A big round of applause and please welcome Mr. Naveen Sharma for the opening remarks.
I welcome each one of you, and I will be very short because you are here to know more about the economic substance and less about the general information. Last Tuesday, the AAA group, which is accounting, auditing and advisory, had a very relevant session on budget. And it was house full, and we thank our members who have shown interest. ESR, which we say shortly, Economic Substance Regulation, law has come. The UAE decided to follow the OECD guidelines. OECD has 15 or 16 action point, and this is the action point number 5, wherein all the companies has to ensure that if they are carrying out any relevant activities, so then they have to notify. After the notification, which is supposed to come in the 2 or 3 months time maximum, the DIFC has issued the guidelines, Abu Dhabi Stock Exchange has issued, and the RAK Free Zone has also issued the guidelines. Now it is applicable to all companies. It means whether you are in free zone, you are not in free zone, mainland company, everybody has to ensure that if the companies are doing any relevant activities, they have to notify. If they are not doing the relevant activities, no need for the notification. And then there will be a test, which is the economic substance test, and then thereafter, the return has to be filed. So this is the second ESR event AAA group is having now, which is, we had first in September and second is now. And the regulation or the notification is expected anytime. I have very little knowledge, but there is someone we always consult, none other than Mr. Nirav Shah, who will share his knowledge with us, a short presentation because we have limited time. Everybody knows him. IBPC hosted number of events. When Mr. Nirav Shah, when the VAT has come 1.5, 2 years back, not only in the IBPC, but in the ICAI and other platforms. So give a big round of applause to Mr. Nirav. After his presentation, we have a panel discussion where we have the ex-ENY, Mr. Rishi Agarwal. He has consented to come and be a panelist. He is a chartered accountant and in the city of Dubai for a long period of time. Profile is already circulated, so I am not reading again. And then we have Mr. TV Ramesh, CFO Hamriya Free Zone, because Hamriya Free Zone is a very large one, and he will share his knowledge about the compliance requirement, about the ESR requirement, and what the company should do or should not do. So I will not take much of your time, and I invite now CA Nirav Shah for a presentation. Give a big round of applause again.
I hope I'm audible enough. Thank you very much to the IBPC Managing Committee, the AAA Focus Group, for once again giving us the responsibility to elucidate and share our knowledge on this subject. First of all, let me share some background of why. So what we are going to cover today is, can you start the presentation? Yeah. Okay, few things. Contents, basic introduction, what is the test about, and I've picked up some sample returns which other geographies have kind of issued for us to just get an idea. As Naveen ji mentioned, so this entire genesis of this regulation is because of the OECD base erosion and profit shifting project. The project started by OECD somewhere in 2015. The whole idea was for all the countries to come together and debate whether the current way or environment in which they were taxing based on either source rule or residence rule, whether that is sufficient, given that all the multinationals were easily taking advantage of various jurisdictions and different tax systems prevailing in different part of world to move their profits in a manner that it suffers least amount of taxes. That was the whole genesis of why OECD commissioned this project at a global level and invited almost all countries to come together and brainstorm on how best to attack these aspects. As a result of first 2 years of hard discussions, they came up with 15 action points. What is relevant for us is that out of that 15, there were 5 minimum action which everybody as an OECD member had to implement. And one of the 5 minimum action point was action 5, which was on the harmful tax practices. In summary, and I'm not going to go into much detail, what it means is that so under the OECD edges, there was a forum of harmful tax practices committee. They studied the tax laws in various countries and specifically identifying if there were sector-wise, industry-wise specific benefits given to companies and were they given any concessional tax treatment. So there were banking rules in certain countries which were beneficial, there were insurance rules which were beneficial, there were IP ownership and rules which were beneficial. All this regime of about 120 countries was studied together, out of which they identified that first and foremost issue is in relation to countries which have either low or no taxes. So moment the country has either low or no taxes or they give certain specific tax benefits. So for example, European countries like Luxembourg and others, their headline tax rate was 29%. But what they did was that for IP ownership, their rules were very, very relaxed. Even if you have developed IP somewhere else, you can easily buy it into a Luxembourg company. And if Luxembourg company is earning royalty income, they used to grant as much as 80% deduction in their tax laws, which effectively meant that the royalty income earned by such IP companies were taxed at 5 or 6%. Similarly, Ireland is very well known as it was being used by most of the tech companies, Google, Microsoft and few others, and Apple. And of course they had a double dip sandwich structure whereby they could take out the profits without paying taxes even in Ireland. And so all these regimes were specifically studied and they then came back with specific action points for each of this regime as well. So come 2017, all across EU, as part of the EU mandate under OECD, all the countries were asked to amend their IP laws wherever they give such concessions, which included Luxembourg, Netherlands, Ireland and few others, Cyprus and others. And therefore across EU, we saw the maximum amount of tax law changes between 2016 to 2017 and a half and up to mid of 17, because by that time most of them had to comply with this frameworks. So as part of that, low or no tax jurisdictions were highlighted to be the center where most of the companies, whether multinational or other smaller entities as well, used to locate and use their regime for their advantage. Now therefore they said that if such countries, the entire economic purpose of those countries was centered or developed around this activity, so they had a consultation with all those countries as well. And not many were willing to introduce taxes as such. So if you assume the list today is very small of a low or no tax countries, which has all the tax havens. So whether you call BVI, Jersey, Guernsey, Cayman, Bahamas, and a lot of others. Unfortunately, because UAE and Bahrain also does not have any taxes, that also gets classified along with this list. So while UAE, Bahrain does have a lot of local companies present here and operating here, but because the regime is such, it does get classified along with low or no tax countries. Specific mandate was given to all these countries in 2018 to start implementing rules whereby they identify and encourage companies which are registered, which are having some substance of operation in their own countries. As part of that, economic substance regulations were recommended by OECD. And therefore, if you look at the broad framework of the economic substance regulation, whether you pick up a BVI law or a Cayman law or a Bahrain law or a UAE law or any other country, the basic framework is common because it comes from OECD mandate. And therefore, the list of relevant activity and what needs to be done is all common in terms of approach. Of course, each country then while implementing has their own way of going about implementation. Some are taking more time, some are not taking that much longer. But EU and OECD are very, very particular and they are following the progress. And every quarter what progress you have made is being reviewed. And therefore UAE was put on the grey list because we were lagging behind in terms of bringing these regulations in the operation. And that's why we saw in last year we got ESR regulation notified, and we also got country by country reporting, which was both are mandatory as part of this project. So this both came in because of that requirement. And therefore that's the background which one must have or bear in mind while looking at this compliances. So one, it is something that has been mandated for UAE to be introduced. We were a bit late in introducing, and that's why we were on the grey list, and that's why it was not only sufficient just to announce the law, but also to make sure that you issue the timeline, you issue the guidelines under that and all that were being monitored. And we'll see when we look at the timeline. Okay, so timeline in UAE was something like that. ASR applies to all entities which has their financial years which begin after 1st of Jan 2019. Cabinet of Ministers resolution came on 30th of April, which was the first prerequisite. Then of course the guidelines were issued by 12th of September because there was a review going on in September of OECD at that point in time. And this was a minimum requirement to be issued at that point in time to get out of the grey list that we were in. So all that has been done by the government to make sure that they adhere to the requirements that OECD had, and therefore it came about, and then the FAQ was issued by the government recently in January. We are still awaiting the exact declaration forms and the return, which are yet to be announced by the Ministry of Finance, but we'll see that in some time. So basic premise and basic thrust is that who is the licensee under the regulation, and anybody who has registered their entity with a UAE licensing authority, whether it is a mainland entity, whether it is a free zone entity, whether it is an offshore entity, if any natural or jurisdictional person licensed by competing regulatory authority in UAE, and if they carry out the relevant activity including the free zones and financial free zones and everybody. So the coverage per se is all the entities that are registered. So we would have typically between 400 to 500,000 entities which are getting covered straight away under these regulations. I'll rush through this because these are something that a lot of people would have seen in press and looked at in detail. These are the 9 activities which are called as relevant activity from the regulation perspective, which are banking, insurance, investment fund, lease finance, headquarter, shipping, holding company, IP business, and distribution and service center business. Now out of this, unless you are in a specific sector like banking, insurance, or investment fund, which is also monitored by Ministry of Finance. So there you have a 2 regulating authority, either an insurance authority is there or a banking regulator is there, and the licensing authority. And to both of them, you may or may not be required to report or to report to. So they already given the list of regulating authorities whom will be monitoring. So in the cases where of the specific business sector related regulating authority, of course you will have to report to them. Otherwise, it's all licensing authorities. Now, in any other country, generally, you have only one authority for corporate affairs, which gives license to the companies. Unfortunately, in UAE, we have 7 emirates, so we have 7 economic departments, which register all the mainland companies. Then we have close to about 40 free zones, which all has their own licensing authority. So we have about 47 to 50 authorities which give license to companies. So while it's easier to implement this in any other country, but given that if there would have been only one licensing authority and one regulator for the business, which looks at this too, here we have about 47 to 50 licensing authority. On top of it, we have banking regulator in terms of Ministry of Finance, we have insurance regulator, and respective financial free zones will have their regulation for specific businesses. So all of that gets added. Therefore, it only adds to some amount of complexity in terms of how do you comply with all of this. Now, I have the definition of all of this, but these are pretty easily available. I'm not going to go into the details of them because I want to cover something which is more important in terms of what you need to practically look at and how you need to adhere to this guidelines. And I just want to give an update of what is happening in UAE from this perspective, this law perspective. So I'm just going to skip some of the definition part. Only exemption available in the law for one to not comply is the companies in which federal government or government of any emirate of UAE or any government authority or body has at least 51% direct or indirect stake. So that's the only exemption available under the regulation. All the others need to adhere to what's prescribed. What is need to be met? So what is the substance requirements? If you are carrying on that activity and if you fall, so there are 3 important criteria that one needs to fulfill. One, like we say that you have to be licensed, so you need to be registered with any of the licensing authority. Second, you have to be earning an income. If you are not earning an income, again, there is no need to go further and demonstrate substance or not. And income has to be earned from one of those 9 relevant activity. So only if you are earning income from one of those 9 relevant activity is when you have to go and meet the economic substance test. So there are 2 levels of compliances as we understand. First is a declaration which needs to be filed, or declaration or a notification which needs to be filed by everybody to tell the respective licensing authority whether you are covered in this or not. So if you are not earning any income or if you are not carrying on any relevant activity, you still need to file the declaration or notification to the licensing authority. That's the first level of compliance. The second is coming when you indeed accept, having analyzed this, that yes, I am earning income from this relevant activity. Then what is it that I need to do? And that's where you need to meet these 3 economic substance tests, which says that the company should be direct and managed in the UAE for that specific relevant activity. The core income generating activity, SIGA is defined as core income generating activity, I'll come to that, should be performed in the UAE, and the company should have an adequate level of qualified employees, premises and annual operating expenses. So these are the 3 tests which are prescribed, which is when you will be considered to have met the economic substance if you are engaged in any of those relevant activity and you are earning income from there. Now, what's very important is, will come at the end on some of the clarification that Ministry of Finance has issued on how exactly they are going to interpret and implement these things. Okay, so what are the requirements? So one I said is annual requirement if you are carrying relevant activity and if you have gross income which is earned from that relevant activity, and therefore you have to notify the date of end of your financial year, because as we saw in the beginning in the licensee definition, the application starts from for the financial year which begins anywhere from 1st January 2019. And since here, because we have so many multiple licensing authority and we have freedom to choose our financial year, they need a notification of when our financial year is ending. So date of that ending, these are the minimum declaration or notification, as I said, is required by everybody. So you need to say whether you are doing this or you are not complying. I mean, you are not meeting this requirement or you are meeting this requirement. So if you are meeting this requirement, then you go to the next step, which is where if you are carrying out relevant activity, then you have to satisfy the economic substance test. It has to be satisfied within the 12 months from the last date of the end of the financial year and file the ESR return as may be prescribed. Okay? What is going to be mentioned in that return? The items are already mentioned in the law. So you need to mention what is the type of relevant activity you carry on, amount and type of relevant income, amount and type of operational expense and asset that you have, place of business and if applicable, plant, property, equipment used. Then number of full-time employees with qualification and number of personnel responsible for carrying out your activity, and of course this core income generating activity that you carry on in the UAE. So this basic information is what is mandated by the law to be submitted in your ESR return, in economic substance return. Of course, the format and the way in which you will need to submit is yet to be notified. So 2 or 3 things are clear at this point in time. Everybody needs to file the declaration or notification, which is initial, to the licensing authority, and those who are falling within this ambit of carrying on this specific relevant activity will need to file the ESR return. Please remember, both these activities are annual, and one needs to, or everybody needs to do this annually. General requirement, of course, is this is something that authority can ask you for further, and fortunately ESR law mentions very clearly that you have to provide information in English. Okay, maximum time that is available with the regulatory authority is a time period of 6 years. So they can take their own sweet time deciding their formats, deciding their criteria, and they can still ask you for their information within maximum 6 years period. Okay, and in relation to intellectual property business, if you are falling in any of that, then the assumption by law is that the company is not meeting the economic substance test, and therefore they have in fact higher level of test which is prescribed under the law, and they have to necessarily file the return, and their notification that we are not meeting the criteria is not going to be accepted. High risk IP business. So in that, if you are in that business where you have acquired the IP without having adequate people, resources, or paid sufficient consideration for the same from the UAE operations, then the information is going to be automatically shared with the competent authorities, and the licensee is presumed to not meet the economic substance test unless the licensee meets the increased substance requirements. And the increased substance requirements are, it has a high degree of control over developing the IP asset, it has adequate full-time employees with necessary qualification that permanently reside here and perform their activities in UAE, and all contracts, their qualification need to be provided. It has a business plan showing the reason of holding the IP in the UAE, and relevant decision making also takes place in UAE, and all this needs to be demonstrated very, very clearly to the authority. Otherwise, the onus, the assumption is that you are not meeting the test. And even if you are meeting and doing all this, please be ready, the information is anyway going to be exchanged. But this is only with respect to the people or companies who are owning their intellectual property rights. I'm not talking about the general trademark that you own for each of your business on a normal basis, but it's the high value IP rights, be it scientific or other research that one needs to do. Okay, so just to summarize, so what are the penalties? So failure to notify is between 10 to 15,000 dirham. Failure to provide accurate or complete information, you have a penalty of 10 to 15,000 and a deemed failure to demonstrate economic substance. And in case of first failure, you have a penalty of 10 to 50,000 and your information exchange will take place. In case of second failure, the information exchange will anyway take place, the penalty will increase from 100,000 to 300,000 and your trade or commercial license could be suspended, withdrawn or not renewed. The issue that I wanted to highlight this was this last part, that if you take it lightly and if you do not comply the basic requirements of even giving the minimum declaration or notification that they need, it could lead you to this kind of worse situation. Because moment, if you look at it in the first slide, moment you don't provide accurate or complete information, you are assumed that you are not meeting the economic substance in UAE. So this is what something that one needs to keep in mind. From a UAE perspective, ADGM held a recent briefing for its companies as recent as 4th of February along with Ministry of Finance. Again, none of this is official. We have got just a background briefing from somebody who attended the meeting. So one view there is that entity will be deemed to be licensee only if it is conducting the relevant activity, which is slightly in contrast with the definition that we just saw. Definition says everybody is a licensee who is registered here and therefore they all need to at least do the declaration filing. But if we go to this level of saying that you will be deemed to be licensee only if you are carrying a relevant activity, then automatically the compliance requirement kind of will reduce, but we don't know that for sure at the moment. Any license which has conducted relevant activity and has not generated income will fall out of the thing. You still have to give only the declaration that I am not meeting the income test and therefore I don't need to demonstrate the economic substance test. And similarly, they mention very specifically that even if you look at or create entities like foundation or trust or whatever, they are not exempt from this regulation. So if they are seen to be engaged in any of this activity, then they will also have to comply with things like anybody else. But if they are just mere shell structure which are owning assets and not earning any income, then of course they will not meet the income test. And again, they have required that all of their licensee needs to do the initial notification by 31st of March. The notification has to be done through their client portal which every licensee has. Of course, the format of the template is not yet issued, because as we understand, the Ministry of Finance is going to issue a common template for everybody so that it doesn't lead to different practices in that sense, you know. From a DIFC perspective, DIFC issued its guidelines and notification in December for all of its registered entities. And again, they have said that very clearly that by 31st of March, the entities have to come back and notify them whether they are falling within this scope or not. Notification method, of course, that you have to go through their client portal again. Again, the template of the notification is not yet issued, and I think they are also awaiting the Ministry of Finance guidelines on that. Just an added on, so amongst the other free zone, RAK has issued the guidelines, but no other free zones have yet come up with their own guidelines or notification because they are all waiting. We understand that the Ministry of Finance had called every licensing authority for a briefing. The meeting was just last week from 11 to 13th of Feb, and they are finalizing their notifications and details, and that should be available maybe by end of the month or early next month, you know. These are some of the sample returns just to give you an idea of what kind of information what country is collecting and doing it. So this is just an example of a Cayman ESR return that we did file for one of our client. So again, all the details that we discussed, company name, ESR reporting period, company number name. Are you in that any of this relevant activity? If you are and if you tick, then there are further questions which will come up. You know, is this confirmed relevant activity as defined in the law? Is this further? Then are you, if you are governed by anybody like SEMA or FI, then you have to provide those further references. And you have to give the details of person responsible who is required to do all this. If you have a director, then director's details needs to be filled in. And if you have the local offices there, then those addresses needs to be given. So like, I mean, as I said, that whatever activity that you tick in, the further information detail, it will ask you based on that. But it's an entirely automated process. You do it sitting in your office, accessing the information online, save it online, and then submit it via an email online. As contrast with that, so we have Marin, which has issued an economic substance return format, which runs into some 16 pages. I have not covered all of them, but just to give you an idea. So again, all details of entity name, the registration number, tax residency of UPO. So here, in addition to looking at what the economic substance requirement is, they are also asking lot many other questions. Tax residency of UBO is not anywhere related to ESR regulation per se, but they have made it mandatory as part of their economic substance return. Entity date of incorporation return being filed for the year, so you have to specify your financial year, and then you see the level of details. So does the entity conduct any relevant activity? Does the entity have any overseas activity, or does it conduct all in Bahrain only? Does your entity consider a part of a multinational entity? So once you say yes or no, then again the relevant sections needs to be filled in and given further details of. Pure equity holding company, then if you are yes, then you go to part D. So economic substance test for pure equity holding company is slightly easier, so then they will fulfill that. If not, then you go to further. So are there adequate number of employees? Are there adequate premises? Does your entity perform any other relevant activity beside being the pure holding? So the return form that Bahrain has issued is very, very, very detailed. Okay, these are just the links that I have given if you wants to look at those. There are few points that I want to highlight, and then I'll leave the session for the panel. In the FAQ which ministry issued in as recently as in December, January, they said that they are going to take a substance over form approach. So what you mention as an activity in your license is not relevant. They will look at your income, what you are earning from, and that income is coming from which activity, and does that activity fulfill any of the relevant activity criteria or not? That's the test. And therefore, merely having a certain activity on the license does not either qualify you for being conducting that activity or does not disqualify you from that. Okay? So again, it's a substance over form approach. It's not going to be just what your license states, and therefore one needs to look at the actual activity that you are doing within the license, and not just the license activity is so and so, so I'm there or I'm not there. No. That's number one. So only what they are saying very clearly, that if your income is coming from outside of UAE also, but if you are registered in UAE and your income is from that relevant activity, then that does not mean that since your income is from outside UAE, you will be exempt from the regulation. So you can earn income from anywhere, but if you fall within the relevant activity criteria, then you have to comply with ESR law in UAE because you are registered here. And therefore, this is very important because all your offshores and other companies who are earning and doing activity outside, they are clearly saying that these are all covered. Therefore, one very important thing is that in the lease finance FAQ, it says that if you are advancing any interest-bearing loans, so even if your activity is not of borrowing or lending, not in business, a banking business, but if as a general trading entity also, if you are seen to be extending interest-bearing loans, then you are deemed to be covered in the lease finance business. So please be very, very careful, because we know as a matter of practice, a lot of people extend loans here which could be interest or bearing or interest free. But if it is interest bearing, it will be termed as a lease finance business. And one needs to comply with the regulation accordingly. What is very important again is the distribution and service center, because though trading and professional entities are not covered in the relevant activity list, but if you fulfill any of the criteria of the distribution or service center, then you might still get covered within those definitions. Again, distribution center, the intent here seems to be that people who are buying from connected persons outside, bringing the goods to UAE, storing here, and then doing the distribution to whether locally or third party or outside here, that gets covered. And similarly for services, if you are rendering such service to a foreign connected person, you get covered here. So again, the emphasis is on transactions which are intra-group or within the related entities. And then if you are trying to do activities without having substance, then that gets caught out here. So these were important things that I thought I will highlight. Thank you very much for the opportunity.
Hi. Thank you, Nirav bhai, for short but effective presentation. And I request each one of you, if you have a question, please be short and ask a direct question instead of giving the introduction and thanking because we have limited time. The first question I will ask Mr. T.B. Ramesh. The onus of monitoring is on licensing authority, and you are from Hamria Free Zone. Do you think they are prepared to handle this? And what exactly are you looking for from the companies?
Thank you. Thank you, Naveen. Good morning, everyone. From the free zone perspective, yes, we are getting prepared for this. As you know, it's countries maturing and going for more compliances and regulations. And being the licensing authority, free zone has got a higher end of responsibility. So we are gearing up. Actually, both Hamria Free Zone and Safe Zone, we are also working very closely with the Ministry of Finance. And we had a couple of sessions on different levels and also in different activities. Now the latest in the series is that, okay, now after that we are waiting for the formal guideline to be finalized from the ministry. And now it's in the draft stage, and currently now the draft is being reviewed. So the date which is given to us is 20th of February. So by then we will be giving the feedback, and soon after that the ministry will be reviewing this. And we hope that, okay, it's, since it's a sense of urgency for the economic substance regulations, I'm expecting that, okay, this will be very closely, this will be released. Once the guidelines is ready, then this will be very clear, and the information that we got is all free zone licensing authority can have their own formats, their own guidelines can be issued. In the absence of such specific guidelines from the individual free zones or the licensing authority, they can follow the ministries. So we are still waiting for the final version of the guidelines. So soon after that, we also have challenge, like being a licensing authority, we have to also spread the awareness among the investors, and we have to guide them, and we need to issue the form, which most probably like unified, as Mr. Neera was saying. And we are actually in the process, and the most probably this will be online portal, it has to be available. So we are also gearing up technology-wise and also systems and procedures update as well. So as we move on, we'll keep you posted as well. Thank you.
So the online portal, simple form, all are coming. When I see in the last Tuesday, we had one event on budget that was houseful. Today we can see the additional chairs. Again, tax-related event, houseful. Is the tax the new buzzword, or is it going to increase the cost of doing business? I ask first Mr. Nirav bhai and then Mr. Rishi Agrawal. Is it the compliance which we need to worry about? The one after the another, VAT has come, BCR has come, now ESR has come. So is it the new era of taxman, which we left behind 25 years in India?
I would say the compliances are given. In this today's world, you can expect only in compliances to increase. I don't see how it will go down. And I won't be surprised even if we get to see introduction of taxes in the next 3 or 5 years, But yes, so you will have to be aware of what your compliances are. You have to comply with them. Gone are the days where you could relax and do nothing about whatever activity that you used to carry on, just focus on that and do it. But yes, compliances are going to be there. You are already seeing that banks are very, very strict with all the transactions that they are doing. So because there are no other manner of implementing compliances, banks are being the front one to implement. Moment we have more and more compliances coming in the ongoing basis, then both will kind of balance. But yes, compliances are going to increase.
Thanks, Mr. Neeram. Good morning to everyone. The cost of operations of the companies will not increase, but definitely the compliance cost will increase. We need to have proper records and demonstrate that what assets, income, revenue, expenses, payroll are held in UAE. How are the board minutes held? How is the company managed and directed, and the supervision is held in UAE. So these are the things which definitely will lead to the cost of compliance, but the cost of operations are unlikely that it will increase. Thank you.
ESR, we have gone through the presentation, and there are two key concepts as far as I, as a user, I can see. One is the foreign connected person. And second one is basically is a very confusing one, but we can see the holding company and headquarter company. So can you explain that if someone is having a business in the UAE, a normal business, is there any need to go through the compliance requirement, or it's okay?
Frankly, so like we mentioned that one will have to review their operations and see whether any of these activities are getting, whether intended or unintended, you get covered within them. Because as I just gave one example of lease finance, so you are purely say a trading company, you think you are not into leasing business. So this will never apply to me. But if you're giving an interest-bearing loan, yes, it does. So like that, headquarter, they've defined to mean that even if you have the management is in UAE, and if you are managing the group's strategies, group's operations from UAE, yes, you are headquartered here. Again, the approach is substance over form. So it need not be that the holding company needs to be here. The holding company can still be somewhere else for your registration purposes or your corporate structure purposes. But if in substance you are taking all the decisions based here, and if your owners are tax resident of UAE, then yes, all that will lead to the headquarter definition needs to be seen. A holding company is still a little lighter version because they are defined pure holding company and others, which in fact gives you a limited manner of compliance if you fall within that. So that's in fact better. But one will need to look at their income and what income is coming from which activity and whether that falls within any of this specified one or not.
So you will force all of us to again read the tax laws. Okay, I have a question from TV Ramesh. As the CFO of one of the largest free zone in this country, usually how you will assist, like is there any series of workshop or series of FAQs or series of knowledge sessions you are planning so that there is no panic? Because each and every company has to see whether there is any relevant activity, whether there is an income, because there are a number of ways people are operating in this country. One example, like you have 3 licenses, but you are billing from only 1 license. You are not billing for the remaining 2. because you just need to have the license so that you can operate normally. So how you are going to help the companies who are within the free zone and outside?
Yes, we are also planning this knowledge session. Definitely there will be a briefing session for the investors. And that also we are actually already engaged a professional consultant, for tax consultant also for the purpose. So we are in the process. Definitely there will be a knowledge session series. And especially both free zones together like Hamria and Safe Zone, we have more than 13,000 companies. So though we don't expect that many of them falling under many of the major categories like banking, insurance, such licenses we are not issuing. But still, we have some segment, like especially on the holding company sector, we have quite a bit holding companies in those free zones. So this is an area where probably that we are expecting that more number of companies will have this economic substance test. So definitely there will be knowledge sessions. And we are actually lining up. Once the guidelines is ready, I think soon after that we are planning to launch those sessions as well.
So this is my last question to panelists before we open the floor for Q&A. Rishi, do you think that this will encourage more companies to outsource some of their routine functions? Because it's becoming more and more technical. So what do you recommend? Companies to take advice from outside or go to the website and do it yourself?
The outsourcing is, it requires a lot of documentation, and we need to prove that although the outsourcing is there, but it is still supervised by the company who is outsourcing the activities. So it's advisable to have a proper consultation on before going for the outsourcing of any activity, because we need to prove that although the activity was outsourced, but it is still managed and supervised. It is still supervised by the company.
So as we have limited time, floor is open for questions. Please ask direct question without any introduction, and please indicate to whom you want the answer.